So sorry for the technical issues. We'll get right back into it. Let me share my screen with you guys. Market makers got to me. Yeah, that's what happened, Magic. What can I say? They were after me recently. I'm going to go back over it just very quickly for the YouTube video. But as we said, looking for continuation towards higher prices due to the fact that after an initial reaction from the fair value gap, right, we returned back into it, which tells me that this is not our objective. So we are going to continue expanding higher. Going back down to our 15. Well, thank you for not calling me. I was right back. I sent a message in general. We see that we accumulated overnight London manipulation, and then between London and New York Open, we had an expansion higher, which means that even though our bias is bullish, we can frame retracements lower. Where I was at before we lost connection was our first discount and efficiency, which in this specific case, we have not respected. It's been a while since we've seen one of this. In typical search in the short profiles, you'll see this happen, right? You won't respect this. But where did we go down to? To this cluster, this previous accumulation. This is something that is important to note, right? This previous consolidation. And when did we stop and go higher? Well, when we took out the first part of it. But if we look at the SMT right here, well, very clear SMT, right? You did not need to go all the way down here just due to the SMT, at least in the short term. So we had lower objectives very clearly, retraced to our objective a little deeper to then continue expanding higher. But of course, this move is not the move I'd want to be part of. Just on this Friday, truth is, you can never tell this beforehand unless perhaps some people can with their specific model. I know I don't spend a lot of time on mine. I know that the trades that I can frame are short after my news, right? Of course, if I see a Judas swing in the opposite direction, framing a setup, followed by, after reaching this objective, taking along towards current daily high and more, right? That is what I am framing. But as we can see from the result, very high resistance moves to the upside following that. We'll look a little more into it. As I said, be looking at 10 a.m., but we had earlier news at 9:45. And the same way that we utilize, I'm going to remove this premium discount just so we can see something and actually remove a few of these. Let me take this away, and this should be only on opening price. Awesome. At 9:45, we can use this just as we used 9:30 and 10 a.m. news. As I always say, when there's only news at 10 a.m., I look at 9:30, and if 9:30 forms a Judas swing confirmed with SMT, then I don't expect manipulation from my news. I anticipate expansion, just like in this case. Since 9:30 formed a Judas swing, now there was SMT, but it was very higher time frame, right? So, well, previous day high in this case, as you can see right here. So there is some higher time frame SMT. You form a Judas swing higher, taking out liquidity. That is your whole confirmation. I don't need anything else, and I don't anticipate that the 10 a.m. news will be related to manipulation since our time-based manipulation already happened. So when I'm coming in and I'm still waiting for 10 a.m., what do I do right at that 10 a.m. note? Well, let's see. I already have my breaker block, right? Looking at this bearish breaker, to be a little more precise, from this range, which could be a little harder to visualize, but purely mechanically, what is a range? From a swing high to a swing low. So you have your range right here. You already have your breaker block. Let me mark it out as such. But you've traded above it, and most importantly, you've traded past that fair value gap. Does this invalidate my idea? Not at all. It could just retrace more. It had to wait for time to align. It had to wait for the 10 a.m. open, which you see with this blue line right here, which I am going to remove these because they are taunting me. But it does not invalidate my idea. It does mean that it's worse. So what am I going to wait for? A confirmation that price is willing to go lower. Now that can come in multiple different ways. Sometimes I look for inversion fair value gaps. sometimes I look for order blocks that are respected. So for example, we formed this order block with the 10 a.m. candle, bearish order block, and then traded back into it and are now expanding away. So I could take a trade somewhere in this candle. But truth is, in this very specific case, along with the 10 a.m., I'm like, okay, well, this seems like an open low, right? Open, low, and then could go expand for a high. So I was not very confident in this. I was waiting for price to go back and trade higher before shorting, or if it wanted to go down right now, it would invalidate this fair value gap that we traded into and respected on the short term. So it was stuck between inefficiencies, right? Our order block we pointed out right here. Let me just actually plot that back. And our fair value gap below, we were stuck between these two. So we're going to break out on one side. And as you can see right here, invalidating this PD array, this is literally me entering on the next candle open. It's a little bit of a harder framework or setup to spot because it takes a lot of different things into account. I understand the current conditions are low probability, if I can say it in that sense, but more so they are high resistance. So in high resistance conditions, price will not respect all the inefficiencies I want it to. It's going to retrace deeper than it should, but still within acceptable ranges, right? So if we look right here, that is OTE, optimal trade entry, looking at 0.62 to 0.79 retracement. So it is still a very good area to look for a short. It is still valid, right? Respecting our premium order block. So I wait for a confirmation of price. In this case, wanted a little more than just the order block, just due to the fact of what we have below and what time it is. But it's given you a really nice entry right there, just being pessimistic, entering on the open of the next candle. So waiting for that candle to close gives you a stop loss, still using the 3 PD array stop loss rule. So order block, fair value gap right here, because you're entering here, and this has yet to be a fair value gap, which gives you a stop right here. Of course, short-term objective, reversal range, clearly these relative equal lows into your 15-minute inefficiency, right? The one we marked out, our first discount inefficiency, is your perfect partial. More specifically, I was looking at this as my full objective because I understand that I'm trading a retracement here. But since that is pretty low R, I prefer taking a large partial here, placing my trade break even. Worst case scenario, I come out on a very small win. Best case scenario, it keeps running all the way down to more objectives, giving me higher risk to reward. So definitely not the cleanest of setup or the cleanest of results, but I do like to point them out nonetheless because some of you like to go a little bit more in depth. Yes, it is recorded. I Play to Win. I like that name. All the events we host here are all recorded and uploaded to YouTube. You can actually, here, I'll link it directly to you. You can actually just look in the YouTube channel and you'll get notifications and links to access the videos on the YouTube channel. Like the one that today I forgot to publish on Thursday. I've been a little all over the place this last week. I've been going on through some personal stuff and it's starting to bleed into the professional life. So I'm going to make sure to take some time off this weekend, recharge for you guys so I don't do stuff like this, forgetting to do some things here and there. Also, just getting back to price, right? You can clearly see here there was a lot of divergence, right? After passing this level, this retracement objective. So that's definitely an area where you'd be looking for a big partial or full objective. See, from this expansion, definitely a big difference than yesterday, right? 150 handle move, that's great. Caught a small piece of that with a very wide stop loss. So definitely something there that is a little more on the unfortunate side of things. Always a pleasure. Once the breaker was created, how can you avoid taking the short inside the first SIBI entry at 9:55? Well, just by seeing the time that you said, for me it's simple. There's 10 a.m. news. And yes, now Forex Factory switched it to orange, but for me, customer sentiment is still what I would recall as a high impact news event. So the reason for me not entering here at 9:55 is because I'm waiting for 10 a.m. But then upon 10 a.m., since price has retraced very deep into this range, I'm requiring additional confluence to this idea. What is that additional confluence? Respective inefficiencies, displacement, right? Creating these bearish fair value gaps is displacement away. Other than news, what would have been a valid trade? Other than news, do you mean like, let's say there was no news? Or you mean other than this in the rest of the day? But yeah, other than the 10 a.m. news, there was this trade. That is the first one I saw. That is the trade I personally took. Had a little bit of a tighter stop loss. I'm always a big salesman, if I can say, on the 3PD array stop loss rule, but it's not always going to be the right stop loss. Like, for example, here, trading already back into this order block and respecting it tells me that we don't need to revisit this. So I had a tighter stop loss, giving me enough risk to reward at this point in time, right? So definitely that is the move that I'd be looking to trade today. But with hindsight, we can clearly see, what move would you be looking to trade today? Well, none of these moves were clear aggressive, except this move to the upside, which did not even give you any clear opportunity for entry, right? So in my book, there was no high probability trade today, other than like even before news, which even that wasn't high probability in my book. So it was just a high resistance day, which trading indices, trading futures, we know it happens. On days like this, it's more about capital preservation than trying to make more money, right? And Kane says this quite a bit. Kane from the lab trading. He always says on a Friday, he says, don't do something that you'll regret for the next 2 days. And that has gotten to me because I used to blow accounts on Fridays. It's crazy. I used to, well, not blow accounts, but I used to have like my largest losing days always be on a Friday. And that would just piss me off the whole weekend. You meant the 9:55 trade, would that be a valid if there was no 10 a.m. news? Yes, definitely. We don't look at the result, right? What do you have at this point in time? You have the same SMT with previous day high we saw. You have your manipulation associated with the 9:45 news. You have your Judas swing forming your breaker block, overlapping PD array, your first retracement into it. That's right there. That is a perfect entry. Quite a large stop, to be honest, right? If I'm placing it right. So yes, your stop loss would be at this level, which does not give me enough risk to reward at this point in time to be taking a trade. Oh, well, actually here too are to this objective, but in my book, this is pretty random. So with hindsight, it's easy to spot that this is our objective, but with no hindsight, I'm always looking at the same logic, right? First, discount and efficiency intraday. That is this 15-minute fair value gap right here that we drew earlier. That aligns with these relative equal lows on a lower time frame. So I'd be looking at this as my objective, and then that wouldn't be enough risk to reward. Your wording was fine. I misunderstood you. Don't worry about it. In cases like this, retracing higher just gives me opportunity to get in. So I still take the trade if it retraces higher. My normal entry would be at this point in time. I understand that this is not enough risk to reward for me to take a trade. So instead of taking that trade and having a lot of adverse movement, well, I just wait for a better entry. Sometimes it will not give you a better entry. That's part of the game. But as you might have noticed, right, I see you in here almost all the time, Magic. You know, there are plenty more setups where this comes from. You have slower weeks, right? This week for me was a slower week. I traded Wednesday and Thursday. Had some nice trades, but just, well, actually Thursday was a huge trade, just lower risk. So not a huge amount of risk to reward. But you have some weeks where it's just you're watching price print. And sometimes it's a little bit unclear. Yeah, no worries. I believe that this is a great setup. As I said, it's just a question of risk to reward. And I do still take the setup if it retraces deeper, for example, up to the point where it would invalidate this fair value gap, which, as we just discussed, invalidating this fair value gap doesn't invalidate my entry, my framework, my idea for this trade. It just requires more out of price. So if it's invalidating this, I need it to form structure and inefficiencies that confirm that the order flow is indeed bearish. But I tend to do the same when my stop loss is very much. Exactly. You can do that too. The thing with a very large stop loss is you're going to take a 300 handle move, but you had a 50 handle stop. That's 6R. It might sound good out loud, but 300 handle should be tremendous, right? It is a huge trade. It should be 12, 15R, right? It should be what I like to call a home run, which I do get. I have some home runs once a while, but that's not what's going to help you, right? So when you have a very large stop loss, you can require more out of it, meaning you require a better entry. But as I said a little bit earlier, it's like the 3PD array stop loss rule is the easiest way to always have a correct stop loss, but it's not the best way to always have the right stop loss. So like I explained here, trading back into this order block tells me that this area, I don't want to revisit it. We've already traded into it, respected it, and formed what we call a propulsion block. More specifically, I'm looking at the mean threshold of this candle for my stop. But see, this is something very precise, and it's not every single time it does this that I'm going to look for a stop loss like that, but it allows me to be very precise and to make more return on the same move. Now, this is something that you learn through review, right? Review and logging. So you review every single one of your trades. You have your basic stop loss placement that you know is always going to be correct, and then you take notes, and then you're like, okay, well, best stop loss. I like to use Notion, so you'd have a column where you can say best stop loss column. You say best stop loss would be propulsion block mean threshold. So see me, I understand these abbreviations in this case, so I just point it out. And then I noticed that, hey, it happens quite a bit. So when there's a propulsion block formed at my entry, I can place my stop at mean threshold. Things like that. This is not something I'm telling you guys, right? It's just this specific example. And I do have rules for specific stop losses. See, it's not even something I teach my students, because it is an absolute waste of time if you're not making money in these markets consistently. Once you're making money consistently, it's no longer about making money. It's about making more money and spending less time in front of your chart. So if I can be more precise and take my trade frequency down to 2-3 trades a week and have those returns, instead of being an average of 2.5R, then it's an average of 5R per trade, then all of a sudden I can make a shit ton of return with very little time, right? So it's about optimization at that point. If that makes any sense for you guys. And we're going to review the rest, but of course with hindsight, we can see it's all bullshit. I would have considered taking a long at this point in time, specifically after taking out this liquidity with such aggressive SMT here, right? We're looking at the same levels right here. I would have considered a long, but it did not give me an entry. It is really that simple. I'd be looking at this breaker block, of course, and this fair value gap. You could say it's in close proximity, but truth is, if you're taking that entry and your stop in this case would be below this candle, does this offer enough risk to reward? No. Well, 1.7, I do take some trades on 1.7, so I can't say anything on that end. To me, that is a little far from my breaker block to be considering an entry, especially after price has already moved 100 handles in that direction. So it's a little hard, because usually that would be my partial, right? I'd be entering somewhere around here, and this would be my partial. So truth is, this move just did not give me opportunity. You'll notice that the Rise model performs at its best in conditions that are of low resistance, whether that's a retracement and an expansion in higher time frame consolidation or not. It works well when it does what it's supposed to do very quickly. Low resistance, very volatile conditions, because then price can't hide from you. It does what it's supposed to do in the correct order and the right way, right? The best example, I just remember we had like a beautiful 10 a.m. power of 3. I believe I posted it. It must be super recent on my Twitter feed if you guys want to go look. Definitely very nice feed. And then looking forward at this point in time, like let's say I go in replay mode, right? At this point in time, am I looking for a trade here? Well, now it's 11:45. I never look at trades past 11:30. Let's say here, am I looking for a trade? No, it went down. went back up, almost all the way up, inducing these highs, and now we're going back down. What is the current market condition? Search and destroy. Do I make money in search and destroy conditions? No. That's simple. And yes, I would have known that before. More specifically, I would have known that at the moment that we started expanding higher here. Well, not just here expanding higher, that's okay. This can be a retracement. But after going past this level and continuing to trade higher, consolidating at this level as well, this frames my whole market. So high resistance liquidity run, low resistance, but going all the way back up, inducing the highs right here, and then going back down, that's search and destroy. It's doing back and forth, right? We're just consolidating within a range, and that's not the type of PA I want to be interested in. So the first move that was offered was the best. Truth is, a student would come to me and tell me, I didn't trade today, I didn't see anything worth it. I'd tell him he's right. But with me in front of my charts, it's very difficult. And that is my one weakness as a trader. It's very difficult for me not to take a trade because I always want to be right. And especially when I know where it's going and I know how it's going to get there. As I explained, I was justifying a retracement lower to then go higher. Well, it's very hard for me to just stand back, right? So what do I do in these cases? I lose money. I pay to leave. And that sounds weird. But what I do is I just place like a 1 micro position and place my trade. 1 micro, by that I mean just a small trade, right? So smaller risk, usually about half risk or sometimes even quarter risk. And I just take my trade. And that is a horrible habit to have. I'm telling you guys, horrible habit to have. But for me, it works. It works with my personality. I want to be right. I want to take part of it. It's easier for me to just say, oh, you know what? You tried to trade. It did not work out. Let's take a step back. Than to just say, well, you know what? There was nothing nice today. Let's take a step back. And yes, that costs me money because when I lose these trades, it costs me money. And sometimes I win them, which means there's just higher variance. I just have a very lower win rate in this sense. But for me, it's about paying for peace of mind. So I can say that, well, look, I tried today, didn't get a good trade, got a loss, go next. But my losing days are $150, $200. Worst case scenario, we're looking at like $1,200, for example. And my winning days are never under $2,000, $3,000, right? We're talking in terms of prop firm numbers right now, of course. But just explaining how paying or walking away, I guess, sounds very bad saying it like that, but that's how I work with things like that. And of course, as I said, nothing in the AM session interests me. In the PM session, looking at a possible lunch rate you could have, right? After taking out current daily high, of course, there's still the higher time frame SMT with previous day high. So you could frame some retracements lower, some expansions lower, all the way to lunch low. That was a very nice trade, in my opinion. But you did have to be ready right on lunch. And for example, here, you'd be looking at the noon to 1:30 range because as we always say, when can you look at the noon to 1:30, noon to 1 range? When can you look at this range? When our objective has been met before 1:30. AM session, right? Opening range high right here. It has been met. I have my lunch rate. My target is now lunch session lows. These are some intraday draws on liquidity. I've spoken at length about them. If you want more information, go straight to the source. ICT One Trading Setup for Life, part of the 2023 mentorship. So you can see that all available on YouTube. Go straight to the source, right? And then you have a bunch of breakable blocks in here. Truth is, you'd be looking for the first one that forms right after this, and it would be this one right here. What would be your entry? Fair value gap at this point in time. You have order block giving you 3 PD array stop loss rule right at the swing high. That seems a little cherry pick. Oh, and you have SMT at this point. So that would be the perfect stop loss, right? Short-term SMT as well, right here. Do you use the SMT with YM as confluence for the lunch rate? I have not looked at SMT with YM for perhaps 4, maybe 5 months. SMT, I am looking at N2 and ES. That's it. That's the only thing that interests me. I don't care what YM is doing. Could I gain some insights by watching YM? Yes. Do I need to? Clearly not. I haven't been doing it for months and I'm still profitable. So why would I waste mental energy, mental capacity, mental space by having to look at a third asset at the same time? But much for me. So no, I personally don't. Very, very close to hitting your stop loss. And of course, lunch low right there. I wouldn't even have looked at taking a partial in this sense. Perhaps looking at the 5-minute range, but just a very small move here. So I wouldn't anticipate the need to go for a partial. We can still look for it, right? Mechanical approach to it. But at this point in time, I wouldn't look at the lunch range to look for my first discount in efficiency, really. I would look at the current expansion range, right? My current expansion higher. My first discount in efficiency are lunch lows, right? But let's say you would use your most recent range, and let's be even more precise and not even use lunch range. Let's use the most recent expansion higher. Then your partial, you could have looked for partial at this first 5-minute in efficiency and discount, which would have been, what, 1-to-1 pretty much? 1-to-1 R. So there's something there. When RR is that small, why partial? It's not going to be worth your while. We can do the hard math in this case, but the truth is very simple, right? It's not going to be worth your while. So what do? Well, once this gets hit, my stop goes to break even. But that's it. It's too tight for me, too small for me to justify taking profits. Well, okay, just put your stop break even. Worst case, it's just a scratch trade, right? Never happened. Break even went to cost. But you're going to be way happier cashing in 3.05 R than cashing in, for example, well, I'm talking for myself, right? But 0.5 something R, and then, for example, not getting stopped out and heading here, but then you only have 0.5 of your position. So you made 2 R here instead of 3, but you had your risk the whole time, right? So for me, it's more about, I wouldn't regard it as greed as most people do, but taking partials at 1 R is very, very early. If you guys want a specific number, I'm never considering anything below 1.5 because I need to make at least 0.75 R per time I take profit for me to be a profitable trader. If I would take profit below that, before that point, that would make me a break-even trader. It is that simple. It is pure math. All that data will be available at some point on the Rice Statistics app. It is not as of yet, but it will be. So just for any future cases, if you guys want the calculations and the math behind the reason why the rules of the Rise model are there, well, that's it. And of course, not considering anything past that, we've already consolidated the whole AM, had a very nice lunch trade move. I'm anticipating consolidation into a close. Do we have any questions about today? A very hard day to navigate during the day, but once you zoom out and actually think about it, we had one nice move in the morning. Well, one high resistance move in the morning, but given you opportunity, then consolidation, wait for PM, beautiful lunch trade to the lows. Not seeing any of you guys type, so I'm going to take that as it was pretty clear and we don't have any questions. My pleasure, Magic. As I said, a play to win. Everything is recorded, so you'll be able to find that on YouTube. Might be a little weird since that first part definitely did not record, so we'll have to see about that at that point. Thank you guys for being here on this Friday night. Usually we tend to be a little bit of a smaller group at this point in time. Glad to see you all grinding. Wish you all a great weekend. I'm going to be taking it easy. You guys better do it too. And we'll see each other back on Sunday for our customary weekly outlook. Have a great night, guys.